To the Philippine benchmark index now, the local bourse sheds 0.5% on Thursday, closing at 7,400. Value turnover was at 5.9 billion pesos. Joining us now for Market Chat on the Markets and More, Sandra Araullo, Chief Investment Officer at ATR Asset Management. Good afternoon, Sandra. Welcome to the Business Roadshow.
Good afternoon, everyone.
Okay, let's talk about the BSP rate cutting cycle first. Following, that cut, a new risk-adjusted inflation is out for the remainder of the year and even next. Now, what rate cut sizes are you seeing down the road? Because BSP sees one more cut this year, I think, and another 100 basis points spread in small tranches to 2025. Sandra, do you think that's cast in stone?
Well, given the adjustment for the risk-adjusted inflation expectation down to 3.3% of the BSPs, that does translate to about 125 for the balance of the year, and then another 100 basis points next year. Our own risk-adjusted inflation expectation is a bit lower. So we think, based on our own expectations there, the BSP has room to cut about 125 basis points in 2025.
Okay.
And then that is also, or we also have to factor in what the Fed might do. And if the Fed were to be more aggressive by another 50 basis points, we do expect that the BSP won't be far behind.
Okay, let's talk about GDP now. Other foreign observers, economic think tanks have been revising their GDP finish for the Philippines for the better, at least for 2024. But what about your investment house? What do you think of the gross domestic product finish for the year? And can it be better? Why? Or even worse? And why?
Well, at least for 2024, we see minimal downside risk to GDP. We still expect it to average around 6.1% for the year. So this is still due to some lingering effects of high inflation on consumption in particular, and the high interest rate environment. I mean, since the cuts to still weigh on investment spending. That said, we are definitely more optimistic about GDP growth in 2025. Which is when we see a lot of the economic pieces really aligning to push aggregate demand. So you'll have disinflation, a stronger peso, lower interest rates, and most likely stable wages. So those all combined, we feel will give us reason to do some upside adjustments on GDP expectations.
Okay, now Sandra, still on the rate cutting. Now the policy easing yesterday seemed to have failed to lift market sentiment yesterday and even today based on the closing numbers. Were you expecting a little bit more investor enthusiasm based on the latest cuts?
We did feel that it was pretty much priced in. So it was less of a disappointment, but more of things being largely priced in. And yes, further rate cuts are also expected to materialize, which should be positive for the market. But there are also some risk events in the horizon. So I think in particular, there is still the external events. You have the U.S. election, so that certainly introduces some caution in the market. And therefore, while yesterday's policy decision didn't exactly reflect on prices on the day, it's because it had already done so earlier.
And a large part perhaps is because it wasn't a 50 basis point cut that may have dampened the spirits of some who were really expecting larger cuts from the Bangko Sentral ng Pilipinas for October. Well, the BSP has always maintained its position that it has to use or it has to see and gauge inflation first, which there are some upside risks right now. But what remain the biggest ones to CPI that you guys at ATR are factoring in, the way you're pricing in this market? What are the most critical points that we need to be wary of when you talk about consumer prices?
So I think the more pressing concern that we hear about is the risk of volatility in oil prices, especially given what's happening in the Middle East. But
Yeah.
our own reading is that we don't see it yet as a major threat. We do consider more strategically underspending on manufacturing and generation capacity to be the bigger threats. So we do need, or we want to see firms to start investing in new capacity given the growth that is being expected from aggregate demand. And if that doesn't come online, then it may result in some constrained supply, spikes in electricity and food prices in 2025 and 2026.
Okay, and to counter that, of course, we've been expecting a lot from corporate earnings, at least as they come trickling in now in the last quarter of 2024. And today we've had BPI capping off 9 months of 2024 record net income of about 48 billion pesos. That is up 24%. Even AUB posting record 9 million consolidated net income at 8.6 billion. Also up at 41%. Now it looks like banks will still lead the Q3 earnings reporting season. No surprises there. But other than financials, Sandra, which stocks or even sectors are you expecting to pick up in terms of revenues?
We are also optimistic on property. We do think that residential revenues are to sustain their high teens growth that was registered in the first half of the year, no? And also mall revenues are expected to come in steady at the high single digits. So maybe not as not as blockbuster as banking results, but also quite optimistic on earnings for property.
All right. Lastly, Sandra, a lot of investors are seeking guidance as to what to do or what to buy, when to buy actually, when you have a market that's hitting a very tough resistance. So what is your nudge and perhaps even your caveat for investors who may want to enter this market at these levels?
Yeah, so for the month of October, we have seen the market consolidate. And it's actually a healthy or signs of a healthy market, no? So in the near term, about 7,250, 7,550 is the range for the market. We do think that it is largely also a function of U.S. election-related uncertainty.
Yeah.
So the different scenarios there will influence or how the market prices the different scenarios. So if we break 7,550, we think that it easily paves the way for 7,800 by year end. And actually, by that time, investors are also already looking at forward. So for 2025, and the targets are quite healthy, I think, at around 8,500. But in the very, very short term, if we break on the downside, 7,250, that means we can expect support to be around 6,800, 6,900. So
Okay.
all of these pricing for the market is contingent on still domestic inflation continuing to improve, paving the way for more cuts by the BSP, and the result of the election, which can affect monetary and fiscal policies and peso-dollar strength moving forward. So those are the kind of levers that are expected to drive the market out of this tight range that we're seeing right now.
All right, I guess that'd be all for today. We do hope to check out with you again soon on how these things develop. Again, Sandra Araullo of ATR Asset Management, thank you so much for joining us this afternoon. Have a great day.
Thank you.